Ladies and gentlemen, good day and welcome to the Tata Power Q2 FY2025 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Praveer Sinha, MD and CEO of Tata Power. Thank you, and over to you, sir.
Thank you, Rayo, and good evening to everyone, and thanks for joining for the call. On behalf of Tata Power and on my personal behalf, I would like to extend my best wishes to all of you for a very happy and safe Diwali. I have over here my colleague Sanjeev Churiwala, CFO, along with Mr. Kasturi and Rajesh from Investor Relations. We have already shared the presentation with you, but I just wanted to take you through few important issues. First is that the last quarter we saw a normal monsoon, and which extended not only right through the quarter, but also extended in October, and due to which the consumption of power was very muted. We of course expect that because of the impact of the long monsoon, the winter will be little severe, and there will be an extra demand of power during winter months. The Section 11 has been extended due to this reason, because there is an expectation that many of the plants, especially coal-based plants, will be under maintenance during this period when the demand is less. Also, many of the hydro plants will not be in a position to generate during winter months, and hence the demand of power from the operating coal plants will continue to be there. We have already shared with you that this quarter our PAT was, before exceptional items, was up by 51% to 1,533 crores, and EBITDA was up 23% to 3,800 crores. Similarly, in the first half of this year, the EBITDA has jumped by 17% to reach 7,158 crores, and PAT is also up by 41% to 2,721 crores. Some of the important things that have happened in this quarter: one is that our 4.3 gigawatt manufacturing plant for cell and module are operating. Our module plant is operating at full capacity at 4.3 gigawatt. Our cell plant, the first 2 gigawatt of cell, has already started production and is now getting stabilized and will be fully stabilized in production by end of November. The second 2 gigawatt also is going to get commissioned in November, and hopefully by end December they should be stabilized and producing at full capacity. So you will see marked improvement in the performance of the manufacturing plant from next quarter onwards. You would also be happy to note that this plant is showing very good initial signs in terms of productivity and yield for the module plant, as also in the cell plant, where we find that the efficiency of the cells being produced is possibly the highest in the country at this stage, and with much better yield. We would also take the opportunity to invite you to visit the plant, and we will coordinate your visit to the site in November or December, so that you can see for yourself the way the plant is operating and how state-of-the-art that facility has been created. We continue to do well in our large utility scale projects as well as third-party EPCs, and you will see large quantity of these projects getting implemented in quarter 3 and quarter 4. In fact, there's a very large quantity expected to be commissioned before March this year. Especially most of the third-party projects will get commissioned before that. You will also see that our work in rooftop solar has really picked up pace. We are not only one of the biggest in the country, but our penetration in various states have increased tremendously. We have huge traction in terms of order and execution of these rooftop projects in many states. And we have committed that we will be doing 10 lakh of rooftop in Odisha, similarly 10 lakh rooftop in UP and 10 lakh rooftop in Rajasthan, apart from many other states where we are working very closely, especially in Kerala and Chhattisgarh and few of the other states also, to see that our penetration of rooftop increases in line with the PM Surya Ghar program, and many of the initiatives that we have taken to increase our channel partners will start showing results in the third and fourth quarter. Our transmission and distribution businesses continue to do well. 4 of our projects in transmission are under implementation. 2 of them will get commissioned in FY25 and the balance 2 in FY26. Similarly, we have recently won another big project, 765 kV transmission line in Odisha from Paradip to Angul. That will also start work in next few months. And we expect to take many more new transmission projects which are coming in different parts of the country in the next few quarters. Our business in pumped hydro, where we had earlier shared with you, last year we had taken you to the site, is also picking up pace. The first 1000 megawatt, our board has approved the proposal today, and we will start the work over there from 1st January 25. The project has received all the necessary approvals, excepting one approval, which we expect within November, December. And some of the activities have already started, the construction activity, and full-fledged work will start from January. Similarly, the 600 megawatt of Bhutan project, we have signed the shareholder agreement, and we will be starting work from January of 25. In fact, already the diversion tunnel work has started at site, and we do expect that it will pick up a lot of pace once all the documentation and the financial closure is achieved within November, December. We are also working on our 1800 megawatt pumped hydro project at Shirota, and hopefully by mid of next year, the work should start once all the necessary approvals are in place. Our Odisha Discom continues to do well. Of course, it had been badly impacted during the monsoon months, and then we had the cyclone also last week, but they have been able to very quickly restore work and restore the network, which was appreciated by the people as well as the government, of very quick recovery of the network. And I think the way the whole business has been structured, we will possibly be able to replicate this sort of an arrangement in many other states which are in discussion with us about distribution opportunities. Our rating, because of all the initiatives that we have taken, has improved tremendously. Both ICRA and CARE have enhanced our rating, as also S&P Global, which has upgraded the rating to BBB negative from BB positive, which is actually sovereign rating. And we do expect that the way the company has been able to take care of its balance sheet, it will improve further by 1 notch or 2 notch in the coming quarters. I do believe that the way the company is today structured and focused on various businesses, including new businesses like EV and rooftop and the businesses in our renewable space and clean energy space. We'll be able to give unique solutions to customers of providing them 100% renewable power. And the company has developed many solutions for that, and this will not only be for the RTC and FDRE projects for DISCOMs, but also for many of our commercial and industrial customers with whom we are working very closely to provide them 100% clean energy solution. So I strongly believe that Tata Power will continue to do exceedingly well in the future quarters based on the strong fundamentals and foundation it has laid for itself. And do look forward for your support in this direction. I would now request Roy to open the floor for question and answers, and we'll be happy to respond to it.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. First question is from Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. The first question is Tata Power solar system manufacturing capacity. So how are you thinking about this capacity? Is there any plan to expand the capacity or integrate backward? That's the first question. And the related question is, how long do you think it will take to stabilize your cell line?
So as I mentioned to you, we are in the process of stabilizing our cell line. And the task before us is how quickly we can stabilize, how do we improve the yield, how do we improve the efficiency. So this is a big task in our hand. We want to make it the best in terms of all operational parameters and financial parameters in the country. And we are right now focused on completing these activities before we decide on any new steps in the future.
Understood, sir. Good to see, sir, that this pumped storage project is taking off the ground. But my question was, a large bid was conducted in Maharashtra in recent past, right? It seems that we didn't participate in the tender. So how are you thinking about tying up this tender, tying up this pumped storage power plant, which we are undertaking?
So our objective is that we will bundle this pumped storage power where we will be producing nearly 8 hours of peaking power along with solar and wind to not only DISCOMs under the FDRE and RTC projects, but also to many of our industrial and commercial consumers who are looking for clean energy solutions. And I think we'll play a very, very critical role in supporting many industries in the country who are looking at clean energy as their input for the activities that they carry out. So we have huge number of inquiries for all these types of projects, and we will soon be tying up with many of them.
My last question on this is solar order book. I think accretion in solar order book has been on the lower side. We are at 150 billion or 15,000 crores, right? Is it the opportunity which is low, or it is competitive intensity which has gone up in recent times? I'm talking especially about third party, solar order.
So there are two parts of this. One is that we have a large order book of third party, which we are trying to complete within this financial year, and we will see that March, major quantity of our third party order book we will complete. The second is our own more than 5 gigawatt of renewable projects are there, which are under various stages of implementation. We want to complete those also, so that in FY26 all these projects are completed. And then we build up a pipeline of projects for FY27 onward. So that's what is our plan. we decided that we will only go for complex projects, that is hybrid solar and wind, or hybrid projects and storage projects of solar, wind, and pump storage or battery storage. So we have been very calibrated in the way that we have been bidding, and we will continue to focus on those type of projects which bring greater value to the consumers.
Understood, sir. Thank you, sir. Very helpful. Thank you and all the best.
Thank you. Next question is from Sumit Kishore from Axis Capital. Please go ahead.
Good evening. My compliments on a strong set of numbers. My first question is, what would be the phase out of the RE capacity addition for under construction projects on your books in FY25 and FY26?
So our phase out we have already given that how much capacity we will be adding in FY25 and what capacity will come in FY26. All the so-called nearly 5 gigawatt of under construction projects will get completed by FY26. That's our plan on which we are working. And this is also shared with you in our presentation.
Sure. You had mentioned 2 gigawatt to be commissioned in FY25 on the previous call. Is that on track?
We had said that on our yearly run rate will be about 2 to 2.5 gigawatts, and that's what we are working on.
So, what was the capacity utilization, for your module manufacturing facility in Tamil Nadu in the second quarter? And could you please speak about the end use of the modules manufactured? How much is for your internal project requirements and how much is third party?
So we will be able to share those details in our presentation. I think it's already there. I don't have the breakup of, but yes, right now it's virtually equally divided between the rooftop solar, third party, and our own projects. And going forward, we'll try to complete most of the third party in the third and fourth quarter. And thereafter, most of the quantity that we'll produce will go for our own utility scale projects and rooftop projects.
Okay. And there seems to be a significant increase in your approved regulatory assets in Tata Power Delhi Distribution Limited.
So there was a lot of regulatory asset amount which was not approved earlier. Now that all of it has been approved, the liquidation plan is being worked out by the regulatory commission, which will get amortized in next 2 to 3 years.
Good to hear that. Just the last point, are there any non-recurring items that you'd like to call out for Q2, either in other income or any other regulatory head?
So Sanjeev will respond to this.
Yeah. So non-recurring, I don't know, but we call it one-off because, as Dr. Sinha said, and you also alluded to that, at Tata Power Delhi, we have received approval for our regulatory assets, right? And there's a liquidation plan that will happen in the next 2-3 years. We already have some liquidation in quarter one and some liquidation in quarter two. And when you look at that one-off, we had at TPTDL 170 odd crore of liquidation, which is shown as part of the income in our distribution business. And then we also had a dividend that we have received from ITPC of 220 odd crore. And this dividend, most likely, while this is a dividend that is a kind of accumulation of the past profits we have received, but more than likely that we will still continue to have recurring dividends coming from ITPC in the subsequent years. Yeah, it's a good recurring item to have and good one-off to let you know.
Sure. Thank you so much and wish you all the best.
Thank you.
Thank you. Next question is from Aditya Vikram from Digital Beast Research. Please go ahead.
Thank you for taking up my questions. It seems the profit for Q2 and the EBITDA for Q2 has been aided by lower fuel cost. Do you see it sustainable, or you think it will again go back to the normal rate?
Fuel cost doesn't move the profit up and down. In a regulatory environment, normally you get cost plus, right? So it is not because of the fuel cost that the profits have moved up and down. It's because of most of the clusters really performing well. When we look at our renewable cluster, the profitability for the current quarter is 300 crore versus 186 crore in the previous quarter. It's up by 61%. Our generation cluster, the transmission distribution cluster, they've all performed well.
Okay. Thank you for responding. Appreciate it.
Thank you. The next question is from Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. A few questions. One was on Mundra. Maybe what's the update there after the availability was down in the second quarter? Any latest update? And we've seen extension of Section 11, and that keeps happening every few quarters, but there's no update on supplementary PPA. There have been solar plus thermal awards from NSCDCL and different types of awards, but why has there been delay on the supplementary PPA? And so just on Mundra overall.
So one is that Mundra plant suffered damage of the coal conveyor system due to heavy rains on, I think, 27th of August. And the whole of September, we could not operate the plant. But within a period of 1 month, the conveyor system was repaired, and it is now operating at full capacity. So the whole of October, it has operated at more than 90% availability. There is one more pump that has to be repaired, which has already been repaired, and so we do expect that Mundra in November, December should do about 95 to 97% availability. So it will catch up and meet the yearly 80% requirement. Secondly, the discussions have been going on with the state governments on HPPA. Since the Section 11 continues to get extended, the HPPA discussions also has not been able to get concluded. But I do expect that we should be in a position to close this issue on HPPA with the states within next few months. Of course, the Section 11 helps us to get a full pass-through cost of the Mundra plant, and hence something on similar lines are being discussed with the 5 procurer states for finalizing with them.
So you're suggesting the delay is mainly because of Section 11 being extended, so there is no urgency. Is that the main reason for delay in supplementary?
Not urgency, but yeah, it is getting little extended because of that. I expect that hopefully there is now sincere effort that is being made from all sides, that we should quickly finalize the SPPA and move on with the agreement which can be there right up to the complete the PPA period of this project.
Okay. Second question is on the Bhedpuri PSP. It is largely a brownfield, so we thought the capex would be relatively lower at somewhere between 4.5 to 5 crore. It seems like there's a cost inflation there, and maybe some change in configuration from 6,000 megawatt hour to 8,000 megawatt hour. What is driving that maybe capital cost inflation for this brownfield project?
See, what happens is each project is dependent upon the local site conditions. And since the site over here is an existing site, and also the level of water from where the penstock will come, the alignment of it has to be done in such a way that it is sustainable for a long period of time. Secondly, many of the pump storage projects are for 6 hours. We are designing over here for 8 hours with opportunity to enhance that also. So I think every project has peculiar and specific requirements, and that's why the cost has been worked on those lines. And these are updated costs. These are not costs which are initial costs. This is the final BTR which has been done through various iterations. So we expect that we'll be able to complete the project not only at this cost or maybe little lower than this cost.
Okay, so given the 44-month timeline, safe to assume that this project will commission sometime in FY29, and maybe the other projects, we cannot use this cost as a benchmark for the remaining 1800 megawatt cost. Is that fair?
There may not be too much of difference because that project also hopefully should start by mid of next year, and we are in the process. But as I mentioned to you, each project has a specific design and architecture, and we need to consider their topography, their conditions before we can take a call of what actually. So thumb rules are just good enough for initial discussion, but when you do a final one, it takes some more time.
Just one quick question. On the EPC, I think till recently the target was about 11,000 crore of revenue in FY27. Given the order book and you're looking to execute in the next 2 years, is there a possibility of risk to that 11,000 crore target that you had for EPC revenue in FY27?
We'll share with you some more updated information when we have the analyst meet in December. So, you know, with the way the business has moved, you will see that with more and more pipeline of projects, our own projects coming in, our focus is more on our own projects rather than third-party EPC, because we would like to conserve resources and use it for our own purpose.
Okay. Thank you, and I wish you all a happy Diwali.
Thank you, and to you.
Thank you. Next question is from Murtaza Arsiwala from Kotak Securities. Please go ahead.
Yeah. So 2 questions. One, actually, the Delhi piece has already been addressed. On this Bhivpuri project, against the project costs of 5,600 crore, is there any indication of what could be the potential revenue on an annual basis for this project? Any return profile that you can talk about? Second, a smaller piece, but on Orissa, the second quarter seems to see some drop in PAT, if there is anything out there that is non-recurring or one-off.
So, Bhivpuri, you will be able to share more details, but the returns on all these projects we had already mentioned are definitely what we get in our regulated business, so nothing less than what we get in our regulated business. In the teens, which is there. The second is, you are right that Orissa last quarter was a very tough quarter in terms of collection. Because of the rains over there, access to many locations, especially in the remote and semi-urban areas, was difficult, and the collection got impacted. I think they will catch up. September collection has been very good. I think October also it will pick up pace, and hopefully in this quarter and coming quarters, whatever collection shortfall has been there will be made good.
Sure.
Thank you. Next question is from Sudhanshu Bansal from JM Financial. Please go ahead.
Thank you for taking up my question. Good evening, sir. In last 2 quarters, we have been doing around 250 to 60 megawatt of the solar capacity addition, and on a yearly basis, we want to do around 2 to 2.5 gigawatt. So how we are planning to scale up this number to this thing? Is the first question, sir.
So many of our projects which we were supposed to execute in Q2 and Q3 have got delayed because our DCR line, our cell line got delayed. We'll catch up and do all that in Q3 and Q4. So most of the other work at the sites have been completed, including balance of plant. It's just that once the modules, the DCR modules are ready, we will be able to. So you'll see a much faster pace of execution in Q4 once the modules are available. Similarly, many of the other projects which we are trying to prepone, which were part of FY26, you will see the results in Q4. So you will see a huge amount of capacity added, which will happen between now and Q4.
Okay, sir. So second is few quarters back we changed our strategy to focus on the captive renewable capacities. So any assessment that how much this our captive group captive can become in terms of the size, maybe in 2 years, 3 years?
I think the details have been shared with you earlier. We'll give you the updated numbers once we have the next round of analyst meet. But Sanjeev, you would like to add anything?
Yes, look at slide 32 of the presentation that has been uploaded. This is the total order book of 15,000 odd crore. Almost 50% of the order book is for Tata Power group companies. And we would expect more in the pipeline to come through. But yes, we are working on a strategy going forward. So we'll be meeting up again somewhere in November, December. We should be able to give you more update. But I think the trend that we have earlier mentioned will continue with the similar trends.
Okay, sir. Sir, just last question. That there was a media news that we have come out with some tender for wind WTGs for 3 gigawatt. Any color on that in terms of prospective bidders and the timeline for ordering?
Well, we examine all these bidders based on merit. So we do a technical and commercial evaluation of them, and based on the least cost, we decide on the suppliers for the equipment.
Sir, any timeline that when we want to place orders and anything?
I think before December we would like to place orders.
Okay, sir. Thank you so much, sir. Best wishes.
Thank you. Next question is from Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the opportunity. My question is on the adjusted PAT number, a couple of one-offs that you mentioned. So the slide 52 has that exceptional item of 440 crores. So that's a cumulative number to take to come to adjusted PAT.
Yeah. So you're talking about the exception item, right? Which is 440 crore in the bottom line. So that is a one-off exception item, and that has happened because 23 companies or subsidiaries of TPREL got merged into TPREL, and because of that, there is a small stamp duty implication of 140 odd crore, which is a cash outgo that will happen in any case after a year after all the assessment happens. And there's about a 330 odd crore roughly on account of deferred tax write-off because post merger there will be the tax regime will be different, and then the existing tax write-off had to be done. But these are all non-cash and one time.
Perfect. At EBITDA level, there is no exceptional that you have. So 3,800 odd crore is a recurring sort of EBITDA for us. Is that?
Yes, that's correct.
Okay, got it. And then second is on the slide 32. where you have given a breakup of the EPC project, order book that we have. So what is the difference between Tata Power Group line item and a group captive? So earlier it was not there, so we just separated this. So what is the difference in these?
This is the EPC work that the EPC division will be doing for the various group companies within the Tata. For example, if you are executing work for Tata Steel or Tata Motors, all of that will fall into this bracket.
And the group captive is the group captive which we do for group does not mean Tata Group. Yeah. It can be a group captive for any third party also.
Okay. And in terms of megawatt, this 15,000 to 64, it will be how much?
Yeah, this would very difficult to say because it would be a mix of various types of projects, but I would say about 4 gigawatts, 3.5 to 4 gigawatts.
Okay, sir. And one last thing. So, in terms of the project that we have, slide 9, where we have talked about total pipeline and further 21,668 megawatt that we will have. So Bhivpuri is not yet added in this particular number. Is that right?
Yeah. So this was made before the board meeting. So Bhivpuri got approved today in the board meeting, so that will get added. And I don't think hydro is included in this. So Bhivpuri is not added. You will get a Bhivpuri. You need to add 1,000 megawatts. So it will become 22,680.
Got it. But the Bhutan one is there. The hydro 600. Okay. Got it. Sure, sir. Yeah, that's all from my side. Thank you.
I was very happy to see that you already got to the presentation and have a pointed question on the slides. That's good.
Yeah, thanks, sir.
Thank you. The next question is from Santosh Kesari from SKKHUF. Please go ahead.
Thank you, sir, for taking my question. I just have one question about our borrowing profile. What is the plan for debt reduction in the next 2-3 years, if you can just elaborate?
Well, I think the way we are narrating is the kind of leverage ratio that we want to have and the coverage that we want to have. Standing as of now, our debt equity is in a very, very comfortable zone. So we don't think there is any need for us to reduce debt further, but to ensure that our debt ratings are on a very healthy scale and our leverages are very, very healthy as compared to our peers.
Okay, so it may go up also. Does it mean that? Depending on the projects we have or the expansion plan we have.
Yes, so the idea is to maintain a healthy debt equity and the debt coverage and ensure a very high ratings for that.
Okay. So, sir, what is the comfortable debt equity ratio you prefer to have? Something like below 1.5?
As of now, we are going around that. So assume 1.5 to 2 times for an infra company is a very healthy ratio to be in.
Yeah, sir, agree. For a power company it is so. But generally, all the Tata Group companies are debt averse now over the past few years. So that's why this question came to me.
Thank you.
Yeah, thank you so much.
Thank you. Next question is from Amit Binde from Morgan Stanley. Please go ahead.
Good evening, sir. Just one question on your solar module manufacturing. Last quarter, you reported about 1,000 crores of revenue on that and 614 megawatts. I think roughly your realization was coming to around 20 cents or so and margin of around 11%. This quarter, I see margin is close to 9%. And if you can help us with the megawatt, and in the market, we are hearing that some of the sales are happening at around 14, 15, 16 cents as well. So how is our realization?
We have given our details in which slide number? Slide number 52, and you can see over there. So our production has increased in the second quarter, and of course our margins are based on how we can be competitive in the market. But definitely not what the price range that you have mentioned. That it is linked to the quality of the product and what sort of guarantee and warranty you are giving for that, and what is the efficiency. So I think we definitely command a premium in the market. These are with many others who do not have the quality and the backup of services that we offer.
Right. Can you help us with the megawatt sold this quarter? Because I can see on slide 52 revenue, EBITDA, etc. you have provided.
You have the megawatt?
83% utilization.
No, that was
but we will provide.
We will provide you the megawatt. Not an issue.
I think that the only thing that I would also want to add is we are still in the wrapping up stage. So I think when you calculate the margins in the sense, we'll not give you a right indicative number. Quarter 3 will be a better number to look at.
830 megawatt. So we have done 830 megawatt in this quarter.
Okay, 830 megawatts, right. So ballpark, would you target around 10 to 12% of margin?
Yeah, that's the range we are looking at.
Okay.
But, again, it depends on what sort of market penetration we are looking at. And again, many of these things are stabilizing. Many of the things also will be impacted once we start getting the state government gas support and incentives that we are supposed to get.
And also, one thing I'd like to mention, it's very difficult for us to kind of compare this with another plant who's in a standalone sale in the market. Here right now, most of our production line is dedicated to our pipeline that we have. And the overall profit that we're looking at is the composite profit that we're making against those bids and the cost that we use. Right now, there's a cost attached to the supply and there's a transfer pricing margins. Right? So I think on a standalone basis, I'll not be able to compare this with other people who are producing to sell in the market.
Right. Right. The other question that I have is on your Mundra coal and shipping cluster. So if I look at your EBITDA that's been mentioned, 516 crores. If I remove the shipping EBITDA, the balance EBITDA is close to around 437 crores, which I assume is for Mundra plant. We had lower sales, so implied EBITDA per unit is coming pretty high, 1.2 etc. versus 0.45 in the Q1, using the same logic. So why should that increase so much? So
our coal profits are kind of almost flattish every quarter, right? And so we're looking at the PAT for the quarter, right? So Mundra coal and shipping.
So 516 crores of EBITDA in the Mundra coal and shipping cluster. So I'm just looking at Q1 F25 over there and the current quarter. We are generating a 437 crores implied EBITDA on Mundra, it seems, versus 263 crores in Q1, whereas our generation was down. So, is there any one-off that we have realized in terms of?
It's not a one-off. Basically, what happens is the way this plant runs, and there is regulatory power plant runs. You have to look at your annual utilization, and your fixed cost is accordingly apportioned over 12 months. Right now, because we have received Section 11 approval, to that extent there's a close happening this quarter, so we will get normalized in the subsequent quarters.
Okay.
We can send you for working separately if you need.
Okay. No worries. Yeah. I'll take it up. Thank you.
Thank you. Next question is from Rajesh Majumdar from BNK Securities. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. So my first question was actually on the solar cell plant. Does it make sense to export cells and use imported cells for our module plant? Because we've seen a number of companies who are exporting cells and generating much more EBITDA and EBITDA percentages than what we are generating right now. That was my first question.
So the response drive, the way the regulation presently works, we have to normally use ALMM modules and DCR modules. So which means for most of the pipeline projects, we'll be using our own modules and cells. And hence right now we're not looking at an export. But yes, when we fully ramp up, we can assume that 25%, 30% will be exported and rest will be used internally.
And the balance will be importing for the module plant. Is that correct?
No, we said 25-30% will be exported and the rest will be used internally for our own asset under construction.
Of the cells, right? Modules will still be made in-house for domestic sales, right? I'm
Both
talking about
both modules and sales will be made in-house only.
No, and when you say 25% exports, you're including modules as well, is it?
Yes, the export would be of modules.
Okay. Okay, thanks. And sir, my second question is on Delhi Discom again. Slide number 50, if you look at it, the PAT has gone up by about 180 crores. So is that the right one-time impact of the truing up order on the P&L?
Yes, that's correct. That's one of truing up impact on the P&L.
And about 275 crores on the EBITDA and 180 on the PAT. Is that correct?
238 and 170.
Okay. Thank you.
Yeah, Rajesh, just a clarification that 170 is before minority. So after minority, the impact should be only 85 crores.
Yes, that's right.
Thank you. The next question is from Swati from JM Financial. Please go ahead.
Yeah, hi. So I just wanted to understand what is the potential capacity utilization that we can reach, let's say, once our module and cell facilities have, stabilized.
Around 97-98%.
Okay. And could you also say, so if I look at your cluster-wise breakup that you have given, this within the renewables cluster, the others does it include all of the TP solar sales as well as some of EPC, or is it some of TP solar and some of solar EPC?
So others is basically the elimination that takes place for our own projects. So that's what is others.
Right. So I just wanted to understand what is this, what is exactly coming into this others, including eliminations, this 3,400 crores that we have of revenue in Q2. What is that exactly? The 3,000, what does that attribute to? Is it the EPC? Is it the solar? Is it a mix of the two?
Yeah. So maybe I'll help to address. In our RSC business, the EPC does a lot of work for TPREL. Similarly, the cells and modules is sold internally to TPREL. Right? On a console basis, all of this gets eliminated. And what you see is the pure play revenue, EBITDA and PAT.
Right. Understood. Got it. Thanks.
Thank you very much. That was the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you very much. Thank you to everyone for joining in the call. And if you still have any questions, please connect to Kasturi and Rajesh, and we'll be happy to respond to them. And you all have a safe and safe Diwali and enjoyable Diwali. So we look forward to connect with you. Possibly in December, we'll have the site visit to the 4.3 gigawatt plant. And I do look forward to meet many of you over there. Thank you. Thank you very much.
Thank you very much. On behalf of Tata Power, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.